So markets in the green today, supported by lower than expected inflation data in the U.S., which improved the outlook for lower interest rates next year. Let's go to Cameron Scrivens, President, Portfolio Manager at JCIC Asset Management. Thanks for joining us today.
Nice to see you.
Without the CPI data for October, that release was canceled, and so we don't have the comparison. What's your take on the November data?
So the November data looked good, but we got some missing information. The BLS workers were not allowed to go collect their prices, and so there's a lot of data missing from October. And so you're basically looking from a September to November number, so you got to smooth the numbers. And so I think we're viewing this as a one data point, and we're going to be really curious to see if it continues into December.
Did you have questions about specific sectors, for example? Where did you see some difference that made you raise your eyebrows?
Well, so we like seeing the fact that you did have some curious things, such as the cost of airline seats went down. You had housing, which is a big component of CPI, almost a third, was down. So you had some kind of different spots that were interesting, but it really is one of the reports I think I saw coming out of Ernst & Young basically called it the Swiss cheese report, and that's very, very accurate because there's a lot of holes in the data, and so it's really tough to get a real bead on whether inflation is softening or whether there's going to be another uptick in inflation and it continues to be sticky. And then that will make the Fed potentially stop their cuts. They started their first cut December 10th, and we'll be getting another report from the FOMC on January 28th.
Okay, let's broaden out. What kind of growth do you expect for the U.S. economy next year, and how much of an overhang do you see tariffs being, or will they be?
So I think you've seen most of the inventory has been probably shaken out of the system from people building up before the tariffs really started to kick in. We're looking at GDP growth probably around 2 to 2.5% into 2026. And we think that tariffs are going to be lapped in the middle of 26. So we are fairly constructive on growth into 26, and if you do get a little bit of support from the Fed with some rate cuts, then we think that we're fairly constructive on the equity markets.
Okay, so where are you investing or seeing investing opportunities right now?
So I think there's a lot of interesting opportunities for stocks which really didn't participate in the huge momentum in 2025. And I think you've got some interesting areas like healthcare, like utilities, like real estate, which have been poor performers. And then you even have some interesting names in the mega caps. I mean, if you take a name like an Amazon, it's only up 3% this year against an S&P of 15. So I think there still is a great opportunity for a stock like Amazon.
You also like General Electric based on sort of travel growth in certain markets. Tell me about that.
So General Electric has been a home run stock this year. They make jet engines, commercial jet engines, engines for military as well as servicing engines. So you've got a lot of interesting dynamics around the world. You've got countries like India, which has just under 20% of the global population, and they've only got less than 4% of the available seats for airplanes. So we think there's a huge opportunity for GE, especially in countries like India, and they're not only going to be able to sell engines, but they're going to be able to service them. And in countries where the weather is very hot and you've got a certain amount of pollution, that wears the engines down faster, which means you're servicing them more frequently.
Okay, are you looking at anything outside of the U.S.?
We are. I mean, we do like Canada. We do like gold. We continue to think that the mineral mining space will be strong in 26. We are very favorable on international companies, especially in Europe. And Europe has been a challenging place to invest in the last 5 years, but it really had a strong year in 25.
All right, I will leave it there. Cameron, appreciate your time. Thanks for joining us. Cameron is President, Portfolio Manager, JCIC Asset Management.